Sensex is opening above 60,000. In fact, opening above 60,100, 60,156, 60,184, 60,190 on the Sensex.
You're entering the future-ready CNBC TV 18 EBIX Cash Studio.
$60,000 conquered on Dalal Street, and for the fifth week running, we saw healthy gains. Hello and welcome to the CNBC TV 18 EBIX Cash Studios. You are watching Taking Stock, the show where we review the week gone by, but more importantly, try and prepare you for the next week. I am Prashant Nair. With me, my colleague Nigel D'Souza. Hi, Nigel.
Hi, Prashant. What a stellar week it was for the markets, when making all-time highs and things were looking so good. Well,
I was looking at that montage of the balloons going up. I mean, that's a Sensex and the Nifty for
That's
you.
precisely the way the markets were moving, right? It's just upward, and there's plenty to discuss in the next half hour, Rod. Before that, let's tell you what we have lined up for all of you on the show. Well, joining us to decode the stellar rally, we'll have Ashwini Agarwal, the co-founder and partner of Ashmore Investment India, and also to track the technicals. For the next week, well, we'll be joined by Jay Bala of Cash the Chaos in Market Opinion as well. We'll be getting your opinion coming in from Samir Arora of Helios Capital and Shankar Sharma of First Global. Also on the show is Mixer Das of JP Morgan and Saurabh Mukherjee of Marcellus Investment Managers. Prashant, well, before we get to all of that, tell us, what do you make of the weekly action?
Buy the dip, Nigel, right? I mean, that's
Keep your sips going and buy the dip, huh?
Buy the dip. There's not very much to it. It would seem that way, right? Another great week. The Nifty up on 1.5%, Friday to Friday. China, that Evergrande issue, it's not completely behind, but for now it's behind. The Fed meeting is behind. No real fresh triggers now in the foreseeable future, except the fact that we hit earnings season. The overarching theme remains intact, which is essentially buy the dip. It's worked in the past, it's working now, and as you saw earlier this week, it does work. A quick word on sectors, really. Real estate was the winner. 20% of the index in the last 5 days, quite something. Godrej Properties, 35% is what it did. So maybe things at the margin are getting a little stretched. We'll see. Metals had a down week. One of the very few indices down 3.5%. The Nifty Metal Index Friday to Friday, and I think here the China thing will continue to weigh. I was just looking at data in terms of land sales in China, and I presented the numbers till August. I have the latest numbers, 1st of September to the 12th of September. Land sales are down 90% after 60% drop in August. Well, that's something which we will continue to watch. And lastly, US bonds have sold off big time. Yields shot up. The market interpretation is that, well, Fed is comfortable enough about growth prospects that they want to have the interest rates lifting off earlier and faster, and the taper to begin and finish early as well. In the near term, it's great news. It kind of triggers the reflation trade, but if yields continue to go higher, it also is de facto tightening of financial conditions, so something which we will need to continue to watch. But stock-specific action through the course of the week, my colleague Agam Bakil is standing by for that. Agam.
But what a week it's been for Indian equity markets, even as indices move into uncharted territory. We start off with gainers as far as the index is concerned, and we do have the Bajaj FinTwins advancing, with the likes of HCL Technologies, ONGC and Coal India also moving up by around 6 to 7%. On the losing end, not as much momentum, but we still do have some losses. A little bit of reversal for Tata Steel, BPCL, Tata Consumer and Shree Cement also showing some amount of weakness. But it is the mid-cap space, and as you can see from the returns here, nearly 20 to 25% returns for the likes of Oberoi Realty, Gujarat Alkali, CG Power, GNFC and Man Infra. That's the kind of up move that we have seen as far as mid-caps are concerned. But on the losing end, not as much, though something like a Gateway District Parks declining by around 12%, with Prime Focus AI Engineering, Orissa Minerals, as well as Jindal SAW declining by anywhere between 7 to 11%. But strength has been seen in the broader markets, and continue to see if this stays as we move into next week.
Thanks a lot for that, Agam. Well, joining us on the show to discuss the week on Dalal Street is Ashwini Agarwal, co-founder and partner of Ashmore Investment Management India. Ashwini, thanks so much for joining in. Well, what a move it has been. If you've not participated, you've really missed out on one of the most breathtaking rallies that we have seen in the Indian stock markets. The question is, what do you do from here? And is there temptation to raise cash at some levels? Your take.
So, Nigel, I think the market is overstretched. A lot of the good news is priced in. We've been taking a little bit of money off and sitting on cash. Not much, because we are long-only investors, and our clients give us money to invest. So obviously, you can't sit on a lot of cash. But within the constraints of what we can do, trying to move up the market cap curve, trying to move into more defensives with each successive increase in the market with each successive week. Obviously, not a time to be taking a lot of risks, is at least our view. Trying to play it a little bit more cautiously than completely, be in a bullish frame of mind at this point in time. Having said this, I'll also say that this market has been climbing a wall of worry for 1.5 years now, and at every point in time, we've all felt a little cautious that things are getting overstretched. Markets are looking expensive. The domestic economy is doing extremely well. The government's lent a lot of policy support, and so those are the kind of mitigating factors. So it's kind of glass half full or half empty, depends on who you are. And I think my sense is that there are sections of the market which are getting a little overpriced, and that's where we are.
Ashwini, hi. I was talking to a serious investor, and I asked him a serious question, how much higher? And he gave me a serious answer, but maybe it was also half flippant. He said, "Ab ki baar 25,000." And I'm putting that to you. I mean, do we need to expand our thinking in terms of how much upside there is here? Sometimes these things become obvious in hindsight. We all know the constraints as far as valuations, etc. go. Your thoughts?
Prashant, this is one of the longest rallies we've had on record without at least a 10% correction. I mean, the last correction that we saw was in the first 3 weeks of May 2020. After that, there has been no correction whatsoever. If you look back into the history of the Indian markets and you go back 30 years or so, there are very few instances where you had such solid rallies without a decent correction. So my number one issue is that, of course, valuations are expensive, but the second one is that how strong the rally has been. And, when I look at individual stocks and when I look at valuations, there are a lot of sections in the market which make me wonder that, what are we discounting now? Are we discounting March 24? Are we discounting March 25? So, 25,000, as you say, Prashant, is possible. Who says it won't be? I mean, if you'd asked me a year ago, will we see 17,000 on the Nifty? I would have said, no way. But my sense is that it's with each successive 1,000 points, the climb is going to get harder. You will need a lot of good news, both in terms of flows, in terms of earnings, in terms of growth numbers, and international developments for us to see that kind of an upside. Now, if you see what's happening around us in the world, I mean, there are issues that are unresolved. I mean, this whole situation in China is still evolving. We don't know where this will go. I think the taper has been very well orchestrated by the Fed, in the sense that it's no longer a surprise for the market. Everybody's expecting it, but at the end of the day, rising rates, that's a reality. Inflation is a reality. There are supply constraints. So, all these things have to be contented with. At the start of this show, I think you or Nigel, I can't recall, one of you had said that earnings season is around the corner and that will make a huge difference. So will we see earnings upgrades? I mean, we've had almost 3 quarters of very good earnings.
Right.
Last September and December quarter saw serious upgrades. The March and June quarter did not see big upgrades, but there were no disappointments. Let's see what comes through this time around. But I would venture to say 25,000 is difficult. I wouldn't put my hand out there and say that yes, it's possible, and and be completely bullish at this point.
You know, Ashwini, the sense you're giving me is the music is playing, you continue dancing, but now you start dancing closer towards the exit door, because there could be a time when the music stops and the drinks run out as well, and then you'll be stuck. So from the dance floor, I think you're moving closer towards the exit door now. But talking about that, let's focus on a couple of sectors. And it's been a week of massive gains for the Realty Index. Well, that gained more than 22% odd. Brokerages, they remain upbeat on stocks. My colleague Sonal Bhutra is joining in to fill us in with all of those details. Sonal, over to you.
Absolutely top performing sector this time. Nifty Realty was up 22% this week, and big gains. Just look at Godrej Properties up 34%, Oberoi Realty more than 30% gains there, Brigade Enterprises up 11%, DLF more than 20% gains, Prestige Estates also was up more than 10%. Well, a lot of positive brokerage notes that came in through the week, but what stood out was ICICI Securities, where they said that now new launches have seen strong buyer demand and they expect this momentum to continue in Q3 of FY22 as well. They said that they expect developers to post record sales booking numbers in second half of FY22, and that is led by new launches. They also said that most developers in the listed space have strong launch pipeline in the second half of this fiscal, and they are looking at growing at a double-digit growth as far as next 2 to 3 years is concerned. Now, the residential market share of all these listed players is right now around 24 to 25%, and it should go up to as much as 29% in next 3 to 4 years. The top picks include the likes of DLF, Oberoi Realty, Brigade Enterprises, Sunteck Realty and Mahindra Lifespaces. All these companies have strong pipeline going ahead.
Thanks a lot for that, Sonal. Well, Ashwini, what do you